This Week in Economics on the 8th of February 2016. This will be heard on some of our outlets on the 8th of February, but nonetheless, we roll on here. The latest job numbers are in. We'll start out with it, and then we'll look at the energy situation worldwide and a number of other things. But we'll start out here from the Bureau of Statistics here, of labor statistics, and we'll have the household survey, usually two surveys here. Both the number of unemployed persons at 7.8 million and the unemployment rate at now 4.9%, changed a little in January over the past 12 months. The number of unemployed persons and unemployment rate was down 1.110 million and 0.8% respectively. Among the major worker groups, the unemployment rate for adult men at 4.5% and for Europeans at 4.3% declined in January. The jobless rate for adult women at 4.5%, teenagers at 16%, African Americans at 8.8%, Asians at 3.7%, Latinos at 5.9%, little change over the month. The number of long-term unemployed, the jobless for 27 weeks or more, was essentially unchanged in January at 2.1 million, and has shown a little movement since June. These individuals account for 26.9% of the unemployed. We'll call it 27% after accounting for the annual adjustment to population controls, the civilian labor force and total employment as measured by the household survey were little changed. The labor participation rate at 62.7% was little changed. The employment population ratio, that's at 59.6%, was little changed also. The number of persons employed part-time for economic reasons, sometimes referred to as involuntary part-time workers, was little changed at 6 million in January, but was down 796,000 over the year that had been 2015. These individuals would have preferred full-time work. In January, 2.1 million persons were marginally attached to the labor force, a little different from a year earlier. The data is not seasonally adjusted. These individuals were not in the labor force, wanted or were available for work, and had looked for jobs sometime in the prior 12 months. They were not counted as unemployed because they have not searched for work in 4 weeks preceding the survey. Interesting statistical gymnastics there. Among the marginally attached, there were 623,000 discouraged workers in January, over 500,000 workers, essentially unchanged from a year ago. This data was not seasonally adjusted. The remaining of 1.5 million persons marginally attached to the labor force in January had not searched for work. Now to the establishment survey. We have the household establishment survey. The total non-farm payroll employment increased by 151,000 in January. Employment rose in several industries led by retail, food services, drinking places, health care. There was a lot of talk in the political sphere about the Affordable Care Act, or Obamacare, would be devastating to health care. The statistics do not bore that out. And manufacturing, private education services, transportation, warehousing, lost jobs, mining, and that is in the oil sector. We'll talk more about that later here, continued to decline. Retail trade, added 58,000 jobs in January, following essentially no change in December. Employment rose in general merchandising stores at 15,000 there. Electronic and appliance stores at 9,000. Motor vehicles and parts dealers at 8,000. and furniture and furnishing stores at 7,000. Employment in retail trade has increased over 301,000. That was over the past 12 months, with motor vehicles and parts dealers and general merchandising stores accounting for nearly half of the gain. Employment in food service and drinking places rose in January to 47,000. Over the year, the industry has added 384,000 jobs, a lot of those establishments around. Healthcare continues to add jobs in January, 37,000, with most of the increase occurring in medical centers, 24,000. Healthcare has added 470,000 jobs over the past 12 months, with 2/5 of the growth occurring in medical centers. Manufacturing added 29,000 jobs in January. Very unusual. Usually the colder winter months, there are less manufacturing jobs available than was in the past. Following a little employment change in 2015, over the month, job gains occurred in food manufacturing, 11,000 there, fabricated metal products at 17,000, furniture and related products at 3,000. Employment in financial activities rose in January, 18,000. Job gains occurred in credit, intermediate, and retail activities, 7,000 there. Private education services lost 39,000 in January, due in large than normal seasonal layoffs. Employment in transportation, warehousing decreased by 20,000 in January. Most of the losses occurred amongst carriers and messengers, 14,000 there, reflecting a larger than unusual layoffs following strong seasonal hiring in the past 2 months. Employment in mining continued to decline, 7,000, since reaching a peak in September of 2014. Employment in the industry has fallen by 146,000, or 17%. And you can expect more. We'll get to that in a minute. Employment, professional, and business services changed a little in January, added 19,000 jobs after increasing 60,000 in December. Within the industry, professional and technical services added 25,000 jobs over the month, in line with an average month gain over the past 12 months. Employment in temporary health services edged down in January, 25,000, after edging up the same amount in December. Employment in other major industries, including construction, wholesale, trade, and government, changed a little over the month. The average work week for all workers on private non-farm payrolls rose by 1/10 hour to 34.6 hours in January. The manufacturing work week edged up 1/10 of an hour to 40.7. Little built-in overtime there. Factory overtime was unchanged at 3.3 hours. Average work week for production and non-supervisory workers in a private non-farm payroll. I'm not sure why we add that. That's left over from yesteryear at 33.8 there hours. In January, the average earning for all workers on payroll workers increased by 12 cents to $25.39 over the year. The average hourly earning rose by 2.5%. In January, the average hourly earning of and non-supervisory worker rose 6 cents to $21.33. The change in non-farm payroll employment from November was revised from 52,000 to 280,000. The change for December was revised from 292,000 to 262,000. With these revisions, employment gains in November and December combined were 2,000 lower than previously reported. Over the past 3 months, job gains have averaged 231,000. Monthly revisions resulting from additional reports received from business since the last publication. Revisions in the establishment survey data in accordance with practices there The benchmark process resulting in revisions is not seasonally adjusted. The total non-farm employment level for March of 2015 was revised down by 206,000. That's a negative 199,000. The absolute average benchmark revision over the past 10 years is 0.3%. The effects of these revisions are underlining trends in non-farm payroll. For example, over the year-over-year change in total non-farm employment for 2015 was revised from 2,650,000 to 2,735,000 seasonally adjusted. And we won't get into the chart here, but adjustments to population estimates. This is for the household survey, affected with data in January of 2016. The adjustment increased the size of the civilian non-institutional population in December by 265,000, civilian labor force by 218,000, employment by 206,000, unemployment by 12,000. The number of persons not in the labor force was increased by 47,000. Total unemployment rate, that's the employment population ratio and labor force participation, were affected by these changes. Some statistical changes are always happening here, and that is the end of that part of it. Let's jump around here. Well, we'll go to, I guess we'll, before going to North Sea, just 1 second here, we want to stay within the U.S. Here. Actually, we'll go to energy, and we'll talk about that a little bit here, and stay within the U.S., and then we'll go to North Sea Brent crude. California has nearly half the nation's solar electricity generation. We were just looking at some of the stats here. This is from the energy the energy agency, the U.S. Energy Information Administration. And we have those charts down there. In 2014, California became the first state to generate, and it's very, very big. From tuning into baseball, we have this 5% of its electricity from utility scale solar plants. Generation with at least a MW capacity utility scaled solar making is up more than two-thirds, and makes up more than two-thirds of California's solar capacity with utility scale there. And we also have 15% distributed solar PV there, and on insulated rooftops of residential and commercial buildings account for the remaining 32%. It's a whole new industry that has been spawning in places like California. Solar electricity capacity that was ended in 2015, November 2015 in the U.S. 52% here, and U.S. minus California would be at 49%. And a little bit of where California is in the scheme of things is the number one state. Looking at it in comparison, the total solar generation, solar capacity, 9.976 in California. And then next is Arizona and New Jersey, and North Carolina, Nevada. You expect Nevada to be up there, and the Commonwealth of Massachusetts at 840 Then New York, Hawaii, Colorado, and New Mexico you'd expect to also be up there, and Texas, a lot of sunshine there at 3.1 there. So in other words, California has half of it. California has consistently moved forward. Let me just go and grab the crude oil part of this. Crude oil. Let's see if we can get that. They have that story up here. Electricity data browser. Well, actually, what we want to get is the gasoline fuel update. I believe that's what we want here. Looking at various sectors where gasoline pricing is in the U.S. is 1.914. That's dollars there. In other words, $1.91, basically speaking, in overall U.S. on the let's see, the 2nd of February. It was $1.82 there, and in on the East Coast $1.83, $1.88 in New England. In the Atlantic, $1.91, basically speaking. In the Midwest, a little cheaper there, $1 and let's see, Midwest, $1 and basically 62 cents. And if we go to the Rocky Mountains, $1.80 there. On the West Coast, you're going to have it a little bit higher there, $2.37. That's the West Coast. West Coast less California, a little bit cheaper, $2.14 there. So those are some of the prices of a gasoline out there. And let's see if we can grab the stats from the oil field. I'm not sure if natural gas, this weekend petroleum, yeah, okay, that's probably what we want. East Coast Gulf Coast transportation field balances supplies there. Over half the total of U.S. refining capacity. That's from the Petroleum Administration for the Department of Defense District, the largest. Let's get down here to it. East Coast region. Well, anyway, we're not worried about that. We already went over the gas and propane inventories fall. I remember, I believe it was last year, propane, we'll get it right in a minute here. Stocks decreased by 5.6 million barrels last week. That's down. And we want home heating fuel increased $1.20 there. The average increased, well, actually, 1.201. Anyway, the average price was $2.08, 2 cents per gallon higher than last week, almost 72 cents over last year. So it has went up again there. We look at that particular situation with crude oil here. Let's see. Yeah. Don't have very good figures there. Future prices are absolutely down. Let's see. About around $33.62. Sort of averaging out there. We'll get to that in when we go to the BBC, and we'll look at energy pricing as far as where gasoline is. Looking here on crude oil, we don't want to look at crude oil futures. Let's see. Crude oil inventories. I'll look at that very quickly here, and we'll move on from this. Basically speaking, it appears, let's see here, 1,000 barrels. Well, this is historic. Oops. We really didn't want this, but we'll get down. Let's see. Well, we'll just move on here and give the summary. This is from Reuters. 2 months in a year. This is a shale oil people have cut their budget for 2016 a second time. Prices are hovering in the low $30 a barrel. Companies' language has shifted towards preserving balance sheets and cash, keeping expenditures within cash flows out there, and 18 of the 32 top companies by outputs have so far outlined their spending plans for 2016. They reduced their budgets on the average by 40%, steeper than some had expected. These 30 companies have on average lowered their spending plans for 2016 by more than 70% last year. And they mentioned here ConocoPhillips and Hess have already planned to spend less than in 2015. Reduced prices, all services increased in efficiencies have helped companies scale back spending. So it's two there, and it's almost like the 80-20 rule. 80% of a cost reduction had already occurred and 20% remain. And that is from Robert Thurmill. And U.S. crude oil production is expected to decline by 8.5 barrels per day in November 2016 from 9.2 million barrels per day in December of 2015. Even if the supply cuts lead to recovery in prices, spending on exploration and production is not expected to bounce back immediately. No, there will be some time. I was looking at an article earlier here on the Balkans and where they were. Let's go to the North Sea. They are losing 150 platforms there within, well, actually within 10 years. A long situation there, and was looking earlier here at some data from Woods Mackenzie, that is an analytics company there. And let's just jump over how much oil output halt due to low prices, just 0.1%. This is from Bloomberg's news outlet after a year of low oil prices. Let's see, 0.1% of global production has been curtailed because it's unprofitable. That's according to Woods Mackenzie. The analysis published ahead of the annual oil industry gathering in London suggests oil prices will need to drop even more and stay low for lots longer. OPEC and major oil companies, BP, etc., Occidental Petroleum, are betting that low oil prices will drive production down, evidently lifting prices. U.S. Oil industry and slumping currencies in the oil-rich companies produce lower production costs in nations from Russia to Brazil. The Woods Mackenzie, analysis provides an estimate that the amount directly impacted by low prices to the tune of 100,000 barrels a day beginning in 2015, rather than the output affected as new projects build up. Aging oil fields decline. Canada, U.S., and the North Sea have been affected the most by closure relative to low oil prices. And this is back to the International Energy Agency, and that's actually, we were dealing with the U.S. agency. Year over year, says global production in the fourth quarter was 96.9 million barrels a day. It forecast that outside of the all petroleum exporting countries' output will fall this year 6,000 barrels a day, largely annual decline, largest annual decline since 1972. Last year, non-OPEC countries, output rose 1.4 million barrels a day. Since the oil price dropped last year, there's been relatively few production shut-ins, according to the report. The company, which tracks costs at 2,000 barrels, 2,000 oil fields, are losing current at about $35 a barrel. For major oil companies, a few months of losses make more sense than paying to dismantle offshore oil platforms. And that's the discussion on the BBC's article, the cost of that in the North Sea. And this is back to the Woods McKinsey report from ConocoPhillips. Ray Lance told analysts at a conference call Thursday that he had been surprised by the resilience of the North American oil industry, noting the efficiencies of the economics that we have been able to drive an industry that has kept supplies going. Irrational pricing of the price of Brent crude, the benchmark, has fallen more than $100 from 2014 to a 13-month low of $27.10. That was last month. Contracts trade at $34.47. That was on a Friday on the ICE future European exchange. Khalif El Fasl, chair of the Saudi oil company, say the current prices are irrational because they are too low to justify investment in new production. He added, in the short term, while there is excess capacity, prices are set to rise by variable costs, and more producers are able to pay cash within the current prices. In other words, locking contracts. New slay oil wells have steeply declined rates, so company production dropped faster if it doesn't drill new wells. So beyond natural decline, lack of new investment, McKinsey report signals that production remain resilient. Bringing negative cash simply means that production costs are higher than prices received. It doesn't necessarily mean that production costs will be halted. So, nonetheless, out there, we'll go now back to the BBC. The takeaway from the BBC article basically is that the North Sea part of oil production next 10 years will fall. The Chinese currencies have plummeted, the reserves, I should say. They have been involved in what is called propping up of the yuan. Plunge there, let's see, at 3.23 trillion. China has the world's largest reserve, but it's declined by 420 billion over 6 months, and stands at the lowest level since 2012, in May of 2012, I should say. While the remaining reserves still represent a substantial war chest, the math around the rapid price of depletion in recent months is simply unsustainable there, and that is from IHS Global Insights chief there. Investors fear, the Chinese authorities fear, rapid devaluation of their currency, as it could destabilize the economy. Many Chinese types hold debt in dollars and manage those debts with a severely weakened yuan, and could cause problems and some companies to fail. So China has been trying to engineer an orderly devaluation of the yuan that is providing hard to deliver, but nonetheless China is working on it. To stabilize the situation, China has been selling dollars and buying yuan. Or yuan. Anyway, it's pronounced two different ways, so we'll attempt to go to the different one. Let's go to Venezuela now. Shops having work hours. No have loose. Shopping centers in Venezuela's capital, Caracas, say they will be having their opening time to 4 hours a day. The move will allow them to comply with government energy rationing. Severe drought caused by El Nino has brought 18 other countries' hydroelectric plants to critical levels. The State Energy Corporation, Corpa-Elect, has wanted to cut twice a day between 1 p.m. and 3 p.m. Then again 7 p.m. and 9 p.m. So they are rationing times. A logical way to go. Turn off lights and not waste electrical resources in Venezuela. Chinese markets lower after U.S. jobs report. We'll get this one in here. Disappointing job numbers. In actuality, the job numbers in January are, although the numbers are not, but the trends are typical for times past. Usually January is a transitional month in normal, or it used to be, economic times. The benchmark index was down 1.3. There, U.S. jobs, we'd already covered that. The numbers were lower than expected, however, marking a slowdown, from December's almost 300,000 jobs. Well, you need to run for about 350,000 jobs to pull the slack out of the U.S. economy, but you are going to have some subpar 200,000 jobs or less, just a matter of what tends to go on there. Toyota, let's see, a 4.7 rise in net income for 3 months to December. However, the firm's operating profit for the fourth quarter fell 5.3%. Not too unusual there. Up and down. We'll go do the numbers in a second here. We'll get broadband costs. Manufacturers paying inflated broadband costs. Always interesting here. These are British manufacturers found by a quarter of small firms and have medium-sized firms were paying an increase of in excess of £500 a year for internet access. But residential access has been given a priority over improving access to businesses. This is in the UK. Essential services organizations want to review competition for business broadband with the aim of getting costs to fall from the over the current Parliament. 90% of respondents to this particular survey said that high-speed internet connections was essential to business as electricity and water. The telecom regulator Oxcon is investigating that on the provisions of the broadband law, and this particular survey, the EEFC, and they don't tell me what the EEFC is. I kind of hate that when we. Well, the quality of networks is currently an issue. This continuing EEFC here, and anyway, we won't worry about what it is. The acronyms, the battle of the acronyms are here, and continue to bear its ugly head. Let me get Australia in here, and we'll move on. Off of the creditors, they've been negotiating there for some time, and, or excuse me, I meant Argentina. I'm sorry about that. The Argentine government has made an official proposal to foreign investors holding $9 billion, 6.25 billion pounds. After 5 years of negotiation, it offered to pay 75% of the amount awarded by U.S. courts. That goes back to 2012. Argentina now offers a $6.5 billion settlement to dispute, according to the court-appointed mediator Daniel Pollock. Now, this is a new right-of-center government there in Argentina. The successor of Cristina Fernandez de Kirchner had refused to negotiate with investors, calling them vulture funds. Nonetheless, that is the best offer they will get. It was 214. Argentina refused to pay, went on default. So this is where it stands in Argentina. We'll go and do the numbers now. Finally, get back here just a second. Sort of went around and around we go. And we'll go to the market data here and see where the other part is. We didn't have very much reporting, in fact none, on the central banks. This time around it happens sometimes. We did get some unemployment figures out there. These are from Friday unless otherwise noted. The FTSE All-Share was down 24.95. In Amsterdam they were also down 4. In Frankfurt, the DAC was down 107.13. In Paris, 27.86. In Brussels, 42.73. In Madrid, they were actually in the positive at 31.40. In Zurich, they were down at 43.27. In Moscow, they were down 7.34. In Johannesburg, 294.82. In Bombay, 0.46. That's on Monday. In Karachi on Thursday, they were at 394.92 in the positive. In Lahore, they were in the negative at 45.11 on Friday. And in Colombo, 1.84. That's on Friday. And on Sunday in Tehran, they were at 465.80. In Sydney, on Monday, they 3.50 in the negative. And the Nikkei is presently at 134.76. It's the Monday reading. Friday, the Hang Seng at 105.80. In Shanghai on Friday, negative 117.53. In New York, 211.61, all in negative there. The Nasdaq was also in the negative at 146.14. The commodities market, the mercantile exchange out in the Midwest city of Chicago at 35.47. In San Pablo, negative 229.64. And in Mexico, they were also in the negative at 522.62. On to the commodities. We're talking a little bit about it. We'll have to get the stuff from the Baker Hughes Company. We'll do that next week. Nonetheless, Brent crude on Friday was down 31 cents at $34.15. The spot was down 26 cents at $34.10. West Texas crude was down 69 cents at $31.03. T-Bin Picker still jumping for joy. He remembers $15 a barrel oil. The Forex. Gold was up $12.25 at $1,158.50. And we do have Dubai gold futures here. It was up $2.40 at $1,158.80. On we go. Let me see. We got the. We don't. Oh well. All right. The Eurex Life Futures. Cocoa was up $31. And white sugar was up $5.30. I'm not sure why we do that. Robusta coffee was down $7. The Bloomberg Commodity Index was at 75.60. And it was down 55 cents. And that will do it for us, for those in business next week. A productive one for the consumer. Keep your eye on the prize. Consumer prices are sort of interesting here after the holiday season, have been quite stable, but there is some discounting out there, perhaps more than we've seen in recent years.